Welcome back, everyone. It's a real thrill, a privilege, and an honor to be here again, talking about real trading. A lot of things have gone on. I missed the Thanksgiving holiday because of Thursday, so we're going to review some of my trades and show you what's coming up. A lot of stuff is coming up here. Um, Christmas trades are coming up now. I'm going to talk about Christmas trades, the United States stock market, gold, bonds, Bitcoin, and we'll have open mic questions in the last 15 minutes of this half-hour presentation. So if you have questions, get them ready, type them in, and send them to StockCharts.com. My goal here is to tell you what's going to happen, not tell what just took place. Anybody can write about after the fact. That's what journalists do. But as a trader, as a speculator, I have to observe to see what's going to happen in the future. And today I'd like to show you my view of the future. It's based on the Christmas influence. Christmas is typically the largest economic stimulus for most nations of the world. People don't realize how gargantuan this Christmas sales is. It's just huge. Sales increase dramatically in almost all retail areas, which means there's an impact on the stock market. There's an impact on individual stocks. Because everybody's selling stuff at Christmas time, we have pre-Christmas sales, we have after Christmas sales. It's nothing but sales at this time of the year. And shoppers see that and get motivated, and they go out and they buy and they spend. It's a huge influence. About 20% of all retail sales take place in December. So it's a massive amount squeezed up in this 1 month. We all had almost 1 million employees in just the United States, almost 800,000 people get temporary jobs during the Christmas season. So those people get paid money and then they go buy stuff. So there's a real impact on stuff that people buy at Christmas time. This is what they buy at Christmas time. This is really interesting. And when people are asked what type of things you're going to buy, clothing is the number one thing. So obviously clothing stores are going to be influenced by Christmas sales. Next is gift cards or gift certificates. Unfortunately, nobody really makes gift cards as a company, but if they did, probably be a pretty good investment opportunity with a seasonal bias at this time of the year. Then games and toys. And then we finally get down to jewelry, which raises the question. We're going to have our contest early this time. You can win a free 2-month subscription to my personal market commentaries, weekly basis, called Larry TV. First person to type in the correct answer is going to win a 2-month subscription. And are you ready? Here is the question. It pertains to Christmas and sales. And the question is, who is the world's largest jeweler? While you're thinking about that and typing in your answer, who is the world's largest jeweler, I want to show you the significance of jewelry sales at Christmas time. Jewelry sales, when people are asked, about a third of them will make purchases of jewelry at Christmas time. So it's a big number that we see there. All those jewelry ads you see, you just started seeing them recently, right? Well, this is a huge time period. Tiffany's alone does about 25% of their $4.2 billion in sales in the last 2 months of the year. Again, such a strong seasonal influence here that's taking place. And this affects the entire jewelry industry. So if we can find jewelry stocks like Tiffany, they're bound to have a strong seasonal pattern here, a pattern that we can trade. So with that, Signet Jewelers is the largest jewelry company in the world. They have $6.2 billion in sales. You really don't know them as Signet, that's the stock. You know them as Kay or Zales or Jared's or Piercing Pagoda, James Allen, H. Samuel, Ernest Jones. They have all these brands underneath Signet, but they are the largest jewelry store retailer of jewelry in the world, which means there's a potential trade there each and every year at Christmas time. I'd like to show that trade to you. Here are the current cycles for Signet. I run my cycle forecast. Oh, look what happens right now. The next cyclical move in Signet should be to the downside. So we have the potential for setup trade on the short side in Signet Jewelers because the cycles now until the end of the year are to the downside. But that's not enough reason to take a trade. We need a little bit more reason than that. So let's look at the seasonal pattern. That's in blue. This is a seasonal pattern. Signet typically rallies starting about September into just after Thanksgiving, and then it comes down. So we see that, oh, we have cycles clicking in here. We have the seasonal pattern clicking in here. And if we look at my theoretical index of commercials who were in the stock market, what would they be doing? They would have been buying back here. They would have been buying at this low. Recently, selling. So we have a fundamental, if you will, setup reason to sell this stock, a seasonal pattern to sell the stock, and a cyclical pattern to sell this stock. So guys and gals, there's your first seasonal trade. I'd look for and take sell signals in Signet Jewelries. You can apply this same thinking also to Tiffany or anyone that's selling jewelry at this time of the year. They had great sales, and then shortly before Christmas, jewelry stock go down year after year after year. A nice trading opportunity for short-term traders. Well, we've seen jewelry. Well, how about retail sales? I mean, it's the same thing, right? Everybody's buying out. You saw the number one thing people buy at Christmas is what? Clothing. So retail sales are going to show the same phenomenon. Retail sales are pretty interesting. If you look at it, the red line is retail sales, and the blue line is all employees. And it's really interesting. Retail sales, when retail sales start to peak, then people get laid off the job. Look at that. That was 2007, 8. Prior to the market coming down, retail sales were coming down. So the people working in retail are really a huge part of the employment equation. And we can get a pretty good insight into the employment equation when retail sales are picking up. That's how the red line picked up right at the low. And then, of course, the economy got good again. So it's a good economic tool as well to look at. But it's all changed now. I was in San Diego about a year ago. I walked through Horton Plaza, beautiful, beautiful shopping center. Well, it was when I lived there. Now it was a ghost town. There were homeless people, there were winos in what used to be a Nordstrom's store window, or not window, but the doors. Like, what happened? Oh my gosh, what happened is the internet. Online shopping now of all US sales is about 11%. And you can see it's just exponentially increased. So whereas it's going to be in 2020, 2025, 15, 16%. This has had a huge impact on retail sales. That gives us some potential trades. So here's more potential trades. Again, I wanted to see what's going to happen in the future, and I don't want to report to you about the past. Here's a trade we've talked about earlier. It's really getting set up. This is Macy's. Macy's has had a very bad performance this year. Here's the seasonal pattern for Macy's about the 9th of December. This is a chart we showed almost a month ago, waiting for this trade for Macy's to start to move back to the downside. So definitely want to look to either take profits in Macy's if you did get fortunate enough to get long in here on the big break, or look for Macy's as a short selling opportunity in the market. And this is where Macy's is now. That was a chart that we saw in the middle of November. And oops, let's go back to our chart. And this is where Macy's is now. It follows. Not only did it break, it's been weaker than the seasonal pattern. It should be rallying in here. It isn't. All the more reason to look for and take sell signals at Macy's. And I would expect this decline to last until the first of the year, maybe even into January. You can see the seasonal path of what Macy's has usually done. So there's a Macy's seasonal trade for you right there. There are so many retail stocks. My gosh, there's Walmart, and there's a really strong, powerful seasonal trade in Walmart and Target and Macy's and Costco and Home Depot, CompUSA, Whole Foods, all these retail companies. Well, which one are we going to trade? Which one can we use for the seasonal pattern? Oh, I don't know. Maybe throw a dart at these. What do you think? Choose the best one, the one you know the most. Maybe you like Toys R Us. Maybe shop at Sam's Club or Costco. Well, there's probably another and easier solution to go to the ATFs, the ETFs. The big ETF has been iBuy and XRT. There's $237 million invested in iBuy ETF and in XRT, 172 million. Now I've looked at all these, and I think XRT probably offers the best bang for the buck and has the best liquidity and actual trading. So there's a trade in XRT. So let's focus on the ETF representing retail stores XRT. Here's a seasonal pattern. We should rally. We started to rally. Now the seasonal pattern is down until into next year. So again, we see a potential setup. The purplish line you see here is unbalanced volume, a measure of accumulation and distribution in the marketplace. Look what happened. While price was strong, went higher here than back here, accumulation didn't. In fact, notice that we've had a high, another high over here, but we've been seeing accumulation getting out of this market. That's not positive. That's bearish, which confirms to me this year, 2019, we should see that decline in the ETF of XRT. And that would suggest to me that Christmas sales probably are not going to be as good as people are thinking they're going to be. If we see XRT starting to have some distribution in it, that concerns me. If we start to look at Amazon, Amazon has about the same thing. It has a strong seasonal pattern to decline about now. We're not seeing the resilient strength we usually should have seen. So I think we'll probably, my guess here is retail sales are not going to be quite as powerful as people thought they might be. So here's my cycle forecast for XRT. It also suggests about the middle of December, we should start to come down into the end of February, into the end of January. So short-term traders, those of you who like to sell short, there's an opportunity for you on the short side in XRT. But get your questions because we're not going to break quite yet, but when we do break, I will answer your questions. And the second half, I'm going to tell you why I've switched from being bullish, as you know, when I first got on this show 10, 11 weeks ago, I was very bullish on the market. I got a lot of hate mail, said, oh, you're just a perpetual bull. I'm not. And I'm not a perpetual bear. I'm a trader. I'm an intermediate term trader. I've got to catch the swings of the marketplace. I can't have a view one way or another. I'll always be bullish or bearish. I will always be an intermediate term trader. So get ready for your questions. And of course, as being Bitcoin week, I'd like to show my Bitcoin forecast and follow up. And here it is. This is a Bitcoin forecast based on cycles. And the big thing about Bitcoin, guys and gals, it's over. It is over for this market. Don't get enamored with this. This is a pattern I call the fallen angel. When you have a big run up in a stock, a break, sharp break, immediately rallies back, a big sharp rally back, takes out that low. Look at it in Microsoft. That happened in Microsoft about 20 years ago. It took about 18 years for the stock to come back. This fallen angel pattern has been a great pattern over the years. And it suggests to me, yeah, we might get a buy point in March of this year, but a long term, are we going to get back here? No. Sorry to break the bad news to you. I know you've got all those dreams about this market, but this is the way the markets work. I've done this for 60 some years now. This fallen angel pattern is one of the best patterns of them all. So my strategy in the Bitcoin market, play it on the short side, sell big rallies, cover your profits on big breaks. When I come back and I talk about the future, I'll have more specific trades for you and I'll be answering your questions. So I'm going to take a break now, and then we'll come back with your questions. And I'm going to show you why Larry Williams has turned intermediate term bearish, not bearish on a long term basis. I think we're still in a bull market, but it's time for a pullback. And I think it's going to be a pretty good one. I just found out we have a winner. Brad was the one who quickly answered that Signet Jewelers is the largest jeweler in the world. Brad, congratulations and welcome to My Larry TV. We will get you set up. You'll give your email, if you will, to Zach, and we will get you going with my weekly market commentaries. I hope you enjoy them. We talked about the Starbucks trade a couple of weeks ago. We said, here's a Starbucks seasonal. We want to be a buyer right around Thanksgiving, rally up for about December 9th. The seasonal sweet spot Starbucks by 2 days before Thanksgiving, use a 3-point stop in the last 26 years. We point out that was 26 winning trades. Well, here's Starbucks, there's Thanksgiving. You have 27 years in a row of this trade being successful. So again, Starbucks 2 days before Thanksgiving holiday, buy, 3-point stop, and now 27 years in a row. So also notice Starbucks seasonal patterns now to the downside, and our professionals have moved to the sell side. So again, another quasi retail stock looking for short signals. I've gone from bullish to bearish. I'd like to show you why. 2 weeks ago, I showed you this slide. We said we have a rally coming and then a break. Well, we had that rally, a heck of a good rally, all-time new highs, and now we've broken. Those of you who may have seen me on Jim Cramer's Mad Money on Monday saw us call that break way in advance, and I think there's more to come. I really like to look at the VIX index. That's the cycles of fear and terror. The VIX index really shows raw emotions in the marketplace, and I can forecast that with our cycle studies. And look what the cycle studies are saying now. The VIX goes up, a little pullback, goes up, till about the 22nd of February, probably another pullback, and around the end of, about January 22nd, the end of February, maybe we'll be through with this entire slide by then. We'll have a lot better view as we move along. The cycle shift a little bit. But for now, clearly, we're really locked in here. The VIX index is going higher, which means stocks are going lower. One reason to be turning bearish here. I also like to look at the advanced decline line. That is really the internal strength of the market. Guys and gals, this is what the real market's doing. So I would like to look at cycles of the advanced decline line while everybody else looks at price, which is really erratic. I mean, you watch the S&Ps are up, they're down. It's really hard to delve out and draw out the cycles. It's a little easier in the advanced decline line. Call the low here, call the low here. We called these lows back here. And it says, yeah, we can rally in here a little bit, but it also says the bigger cycle is to the downside. I have to respect that. I also look at the Dow Jones 30 to see what the cycle forecasts are saying for the Dow Jones 30. It says down until about February 13th. So we really have a culmination of stuff here telling us it looks like this market's going to move to the downside. I look at the S&P E-minis, do my cycle forecast there, same thing. So I'll show even a very short-term forecast. This is intraday using a 15-minute bar chart. It suggests we can rally a bit more today and then probably later tomorrow turn back to the downside. My short-term trading strategy, I want this market to rally up to being short-term overbought, and then I'm going to look for an entry on the short side in this market. But rest of the day, it looks like we should move a little higher based on our very short-term 15-minute bar chart forecast. So why? Not just enough to have these charts. Is there a reason for this stuff going on? Yeah, I think there is. The GP forecast is 1.3% now from the Federal Reserve Bank of Atlanta. It was 1.7. They've lowered it consistently. It lowered gross domestic product forecasts have come down and down and down. And that's not really bullish for stocks. It doesn't mean we start a bear market because of this, but I think the reason we're seeing this selling is the federal open market actions as well as the GDP forecast. So I think this is the explanation of why suddenly we're starting to get some negative stuff coming into the markets, because GDP forecasts by the best guys that are doing it are moving to the downside. Let's take a little closer look at the forecast. This is done about every week, and you can see the forecast was really good, but starting right at Thanksgiving, they are forecasting down, and virtually all areas, whether it's government spending or residential investment, it's to the downside. I think that's why we're seeing the weakness in the stock market. Talk about gold, and then I'm going to answer your questions. This is the gold forecast we showed a couple of weeks ago. Thought gold should start to pick up here to the upside. We said silver has been weaker. Silver should rally, but it's been weaker. And this is what's actually happened. Gold has started to rally right in phase with our cycle forecast, which suggests we can rally into the first part of 2020, then a little dip in the marketplace. Of course, as the markets unfold, we'll get a better view. But for now, I'm long gold. I'm looking for gold to go higher. These cycle forecasts are done using timing solutions software, www.timingsolutions.com. Okay, fire away. By now, you've written in your questions. I'm going to do my best to answer them. Zach will put up charts for StockCharts.com, and then I will look at my indicators and be able to give you my sense. So, Zach, do you have a market or a question for us?
Yeah, we have lots of questions going on. So I'm just going to get my chart up really quick. Bear with me, everyone, while I do this. And the first question is from Nick, and he's just simply asking what's going on with Amazon.
Amazon, hold on, Mick. Can you take your chart off my screen, Zach?
Oh, you want me to go ahead and get rid of that?
Well, show that to your viewers, but I'd like to look at some of my private indicators for Amazon.
So
Maybe we can't do that.
I'm not able to exactly do that. What you can do, Larry, is if you go to the very top of your screen, you can say exit full screen mode, and then that will allow you to get to the other windows in your browser.
Exit full screen mode. Okay, hold on, guys and gals. We're getting there.
We'll get it. And if we need to, we can go just slightly long for this show. Just there are so many questions that came in. So
Well, I did look at Amazon earlier. So Amazon has a seasonal tendency to go down now. It's not as strong as it should have been here. So intermediate term basis, Amazon to the downside, guys.
okay, we have another one, GBP. And I will pull up that chart really quick.
Okay.
GBP. It looks like I don't have GBP apparently in StockCharts. Sorry about that, Perko. Let's go ahead and move on. Your thoughts on wheat? How's wheat doing?
I'm looking to buy corn today. Actually, both wheat and corn, I think, represent they're getting close to a short-term buy point here in the market. So I'm not long. I have resting orders in the market, but I think we could see those markets rally here.
Cool. And then I'm going to just switch this to a daily mode for you. Update that. Make it go larger. And the next question is for home builders. Comes in from Peter. What's your thought on home builders?
The stock or the group?
This is an ETF. Home builders, XHB.
Okay, XHB. I'll tell you what's going on with that right now. XHB has a seasonal pattern to rally about now. So I would want to be looking for and taking buy signals in this market. The advisors turned pretty bearish on this market. Only about 37% of them are bullish. That's a low reading. And usually when advisors are not bullish, the stock rallies. So I would look for this market to rally.
Ooh, nice. We also have, what would you be looking for in the charts of the seasonal cycles for the S&P 500? So this is from Jack in here. Let me pull up the...
Well, the theory is we get a Santa Claus rally, but this time of the year, we're probably going to get one, but I don't think Santa Claus bag is going to have many toys in it. The big move, I think, is to the downside. So I want to sell rallies in the S&P.
Okay. Next one. Your thoughts on the MACD as a short-term indicator?
Well, MACD was developed by a friend of mine, Jerry Appel, so many years ago. Jerry and I had some great times together. It's a wonderful indicator. The only thing you have to be careful of all these indicators, whether it's John Bollinger stuff or my stuff or Jerry's stuff, they're pretty redundant. So if you have MACD and Bollinger Bands and Larry Williams stuff, the only one of them. But MACD has been a great indicator. It stood the test of time. Just make certain that it's in the same cycle that your market is. If your market's, say, a 20-day cycle, you'd want to use about a 20 and a 10-day MACD. Try to match the map of your indicator to the cycle of the market.
Okay, and I can show people, you guys can go ahead and edit where those indicators are, and you can edit anything like along those lines down here in your indicators area. You can change the parameters for everything, and also in StockCharts ACP, you can do all that as well. So, okay, let's keep on going. From DJ Larry, some indexes show volume. If you can't trade an index, where do the volume data come from? Not sure.
I don't know. Well, there is volume. There is anything that trades has volume. So I don't know why you're not getting volume, because there is volume. If you're looking for the Dow Jones index, that's a compilation that Dow Jones publishes every day themselves. There is a futures contract for the Dow Jones, but the index, the S&P 500 and the Dow Jones are a theoretical index, though we now have actual future contracts on those indexes that we trade.
Awesome. And then from John, I have, do you ever go long VIX futures?
Oh, sure. My wife is long VIX futures now. Yes, definitely. You saw the forecast; it should go up. So the position here is you want to work this market from the long side.
There's the VIX. Man, it's kind of trending a little bit lower right now. Okay, Larry, how do you use the Baltic Dry Index as an indicator? Do you see BDI as
I
the
have used the Baltic Index, but about 4 years ago, it started to wander all over the place. I don't think it's the great fundamental tool it once was. It's not bad, but it's gone kind of from top shelf to bottom shelf. So it's there. I look at it, but I wouldn't bet the ranch on it. That's for sure.
Gotcha. Let's continue. Uh, put up the charts that I missed. For Chris, you can go ahead and scrub back. If you missed some of Larry's charts, you can simply just go to your window at the bottom of StockCharts TV, and you can go ahead and use the scrub back tool to do that. What happened to Home Depot stock? And you forecasted some 5 days before Thanksgiving. Oh no, I actually watched that one too.
Well, let's see what happened to Home Depot stock.
Let's see what happened to the Home Depot stock.
Home Depot has started to come down and has come down again. And it's another reason why I think that the retail sales will not be as strong as we thought that they would be. This stock should have rallied. It typically rallies at this time of year. It didn't. So there's a message there. And I
That's
think,
right. And I remember you said 34 years, and obviously the stock market is a stock market, and it things
well,
change.
yeah, I mean, there's no guarantees, as we all know. But the fact that this stock and a couple of the others didn't have the strong seasonal performance suggests to me retail sales will not be as large as uh, some people are hoping them to be.
Awesome. And we're running short on time, so we only got time for a couple more questions. But what's your target for gold? So would you like me to pull up the gold index, or what would you like?
No, no. So I want to talk about bonds too. My target for gold is time. I'm not all that great. I don't know exactly where these markets are going to go. My good buddy Tom DeMarco is really good at giving price targets. I'm okay at it, but I'm not the best on that. I think my work is better in time. And they said, we should rally into at least the middle of January. So I'm holding on for time. And if we have time, I'd like to go to the bond market, which is back on my PowerPoints, unless
Yeah,
we have
why don't
another
you go ahead
question.
and share it? Go for it. You
Okay.
just need to go ahead and share your screen.
I thought I was sharing my screen, but let's
Oh, well,
see.
I took it from you, so I
Oh,
stopped your share.
okay, so
Here, let me help you out with that really quick.
share.
And we got
That,
about a minute
that
and
should
maybe a
share
minute.
now. You seeing it now?
It's looking great.
Okay,
Yep.
good. So this is a forecast we showed for the bond market. We thought we'd have the bigger moves to the downside, a bit of a rally, and then go lower. And updating that, this is what our cycles are saying. We can rally in here a little bit more, but then we start to move to the downside. And this is the current update. We had a big rally yesterday, day before. I thought, oh, I wasn't ready to buy that. But my cycles say we should move to the downside. So I didn't do any buying in here at all. I still am looking for a little later this month, a sell signal. The cycle's been pretty good in this market. So I'm looking for the bonds to go down to about the 18th of January, or at least sideways. Sounds unusual because usually with stocks decline, which I expect, bonds rally, but not always. There's no absolutes in this business. So that's my idea of what's going to happen in the bond market. A little bit more of a rally here and then to the downside. Well, that kind of wraps up this week's performance. If you want to follow me, you can see my weekly market commentary, $29.95 a month. You can go to our website, ireallytrade.com. Come trade with me. You've seen my forecast here, and we do a lot more with our weekly market commentaries. Until next week, this is Larry Williams wishing you good luck and good trading.